Hi, this is Charles Hoskinson broadcasting live from warm, sunny Colorado. Always warm, always sunny, sometimes Colorado. Today is June 12th, 2025. Making a quick video, talk a little bit about liquidity, portfolio management, and some finance stuff. So, as many of you know, Cardano has a disproportionately low ratio of stablecoin issuance to our DeFi. It sits a little under 10%. So, there's about 33 million dollars worth of stable coins issued in the Cardano ecosystem and about $330 million worth of TVL. And when you compare that with Ethereum, the ratio is instead of less than 10%, it's actually 190%. And in Solana, about 110%, and respectively like 190 billion versus 110 or something. And I forget the Solana number. I think it's like 11 billion to 8 or something like that. And anyway, a lot of people are talking about, well, what do we do with the Treasury? So currently the Treasury is kind of push only. So it gets filled up with inflation and transaction fees. And there really aren't any yield bearing instruments inside the portfolio of the Treasury that generate returns and then donate those returns back like you would with a normal sovereign wealth fund. So when you look at things like Norway's sovereign wealth fund or Abu Dhabi's sovereign wealth fund, both of which over $1 trillion, they get annualized returns. Those returns get sent back. And there's policies about how much can be spent on an annual basis. The same for Alaska's, which is about $180 billion. So one of the things we're looking into right now is, can we solve a lot of problems at the same time? And what I'd like to see is, could we take about $100 million worth of ADA in the Treasury and convert it to a blend of a collection of stable coins incumbent in Cardano, so USDM, USDA, as well as ADA-backed stable synthetics like IUSD, and also convert some of it to Bitcoin to prime the Bitcoin DeFi. It's complicated because you have to also look at the yield side of the market and the readiness of the DeFi applications for this. So I wrote a document, which is about 40 pages long, and I gave it to Dan Singelman and to Fahmy and Ryan and a few other people on our side. We're going to look at it, and then we're going to syndicate that with a lot of the DeFi applications in the Cardano ecosystem and have a discussion about practicality and readiness, as well as where yield would come from, either from the RealFi side or real-world assets. But I do think we can easily pair that. Now, there's a lot of people running around on Twitter just running their mouth that somehow a sale of $100 million worth of ADA would be catastrophic to the price and collapse it. I guess that comes from inexperience. People don't seem to understand that while Cardano has many failings, liquidity, exchange listings, and trading is not one of them. Hundreds of millions of dollars of ADA changes hands on a daily basis. And the markets are deep enough that it could absorb within 30 to 90 days using TWAPs, OTCs, and other mechanisms, a $100 million sale without moving the ADA price in any significant fashion. Not 10%, 15%, probably less than 0.5%. And then speculation alone probably would move it in either up or down. In fact, we see much more volatility on a regular basis from all these things. And I don't think for a moment that a $100 million sale would cause any problems at all. We just know this because we deal on a regular basis with people who have exchange products, who do OTC transactions, watching the markets on a daily basis, and just talking to people on Wall Street and looking at the trading market making capabilities of Cardano. The markets are more than capable of absorbing this, and it will not move the price. You can talk to any professional trader who actually operates at an 8 to 9 figure level on a daily basis of cryptocurrency volume. ADA does not have a liquidity problem. So no proposal's been pushed yet. What we're going to do is work on it, and as I say, start syndicating it. And I think this is something that probably by the time horizon of Rare Evo, we can begin to propagate. But the hope is to get those ratios more in line with what you would expect in a DeFi ecosystem of at least 33% to 40% of ratio between stablecoin issuance and TVL on the network. The other thing is that by doing so, it would substantially enhance the possibility of getting some of the stablecoins in Cardano listed on tier 2 and 3 exchanges, and then all around will improve the liquidity. We as an ecosystem have to be willing to invest in ourselves. We can't go to venture capitalists and say, well, you should put a bunch of money in Cardano, or external people and say you should buy some ADA, when we are unwilling to deploy the assets in our treasury. First thing you do when you have assets for a public good is you diversify them. And the reason being is that the diversification ensures that the asset's buying power is preserved. Now, I do believe that it will not materially impact Cardano by doing a conversion of 5 to 10% of the treasury into stable assets and assets like Bitcoin. And in doing this, we can create a yield, and that yield on an annual basis can be used to purchase ADA and over time replenish the treasury. And if this program is successful, then we can actually continue that strategy on an annualized basis and over a period of 5 to 10 years, potentially grow to a $1 billion plus stablecoin treasury and Bitcoin treasury to augment and enhance the ADA value in the treasury that we have. This sets us up for great returns and for a pretty stable floor for the ecosystem as a whole, like you would want in any good sovereign wealth fund. It's a discussion, and really there has to be some discussion about how it would be governed and managed. I think there's a lot of opportunity for actual decentralization here. For example, it'd be really cool to actually have a governing board be elected to manage the sovereign wealth fund, and some competition amongst administrators to manage it. And then the profits generated minus the administration fees would be used to purchase ADA and donate it on an annualized basis back to the Treasury. And of course, at any time, the stablecoins can be liquidated, ADA can be purchased, and then that ADA can be donated to the Treasury. So effectively, it converts it back in. But this is something that everybody should start discussing is, what do we want to do above and beyond spending the money for growth hacking and for development? Do we want to have something that appears like a sovereign wealth fund as we are a digital nation? And what are the goals of that? I think, frankly, solving the stablecoin liquidity issue and augmenting and enhancing the DeFi ecosystem through a blend of various stablecoin instruments, synthetic assets, and also creating some demand for yield products that can be brought in. And there's already several RWAs and things that could be brought in. I think that's a really good step forward. And what can happen is that capital can be syndicated. So once this starts moving in anticipation of the bull market, we can see a multiplying of it, 5 to 10x of outside capital that starts flooding in because it's a bull signal that Cardano is investing in its own ecosystems. Now, there's a long road between an idea and the execution implementation of that idea. This would require a coalition of Cardano DeFi applications like the Fluid tokens and Indigos and the DEXs and all these others to cooperate and work with the idea. And also, we'd have to figure out how the audit and oversight would work and the governance would work of it, and how the reporting and transparency would work of these things. But remember, none of these things are unworkable. We already have a pretty good treasury contract for the withdrawal of funds that was written by Sunday Labs and audited by TX Pipe for the budget withdrawals that are being proposed. So it would be pretty straightforward and fairly simple to have most of this be functionally what's called a Borg organization or a cybernetic organization. So some combination of a Duna with smart contracts, I do feel would be a prudent structure with an offshore management vehicle connected to some regulated actors that basically do asset management for a living in the Web3 space. And the returns can be anywhere from a few percentage points all the way up to double digits, depending upon the risk tolerance of the profile. But what this would allow us to do then is not only correct that liquidity problem, but also have a talk about a long-term growth of stable assets that are at the discretion of the Treasury. I can imagine a world where Cardano's Treasury has billions and billions of dollars of both ADA and other things. And it's important to understand that Cardano's Treasury will inevitably be multi-asset. And the reason being is because of partner chains. You see, when Midnight launches, Midnight will pay block rewards to the SPOs and to the ADA delegators, meaning that those who participate will receive both ADA and Night token. Well, once we enable the Treasury to accept Cardano native assets, then we can also start creating a reality where partner chain fees go to the Treasury as well, which means that the Treasury will be a holder of not just ADA, but also Night. So how are we going to manage these types of things, especially if we have 5 or 10 or 20 or 30 partner chains and we have a big portfolio? Also, transaction fees in Bitcoin for Bitcoin DeFi, those could also go to the Treasury. And if that's the case, then the Treasury will start accumulating. The more Bitcoin DeFi we have, Bitcoin as an asset, the same as stablecoin settlement. So let's say that Tether or Circle wanted to use Cardano as the vehicle to issue stablecoins onto Bitcoin. they can pay their transaction fees into Bitcoin in the stable asset because of Babel fees. So we have to begin building infrastructure as an ecosystem for a treasury that is multi-asset. And we have to begin thinking around how do we administer that and govern that. And also, what's nice is it allows highly specialized people with a deep finance background and a good understanding of Web3 to basically run for an oversight role, in addition to dedicated administrators coming in to manage those funds on behalf of the ecosystem. So, a lot to think about, a lot to talk about. And the hope is that we can have something fleshed out by Rare Evo that can actually be discussed in detail with the community as a whole. And then after we get past the current 39 budget withdrawal requests, we can discuss this as a supplemental perhaps before the end of the year. And as we're doing the post-mortem on the budget process, make some provisions in the Constitution for more granular Treasury management on the portfolio allocation side. But don't allow anybody on Twitter to come tell you, say, we can't take a $100 million sale. Plenty of people have done it in the ecosystem, especially Japanese whales. And then many cases have done it in a stupid way. But using TWAPs and OTC and just common sense on iceberging, the market can easily absorb without any disruption 7 to 8 figure divestments on a daily basis. And there's a well-traded asset. ADA is a staple. And we regularly see $500 million to $1 billion turnaround that occurs on a daily basis. And that's just the surface stuff, not the OTC trading that isn't picked up or recorded, but is starting to occur because institutions are acquiring ADA in chunks for exchange-listed products. So there's not going to be any issue at all for $100 million divestment. It just has to be done by professionals. You don't go and just dump it on an exchange. So there's plenty of people in finance that do this for a living, and probably 50 basis points worth of slippage is what you're looking at. So anyway, just food for thought, something to think about. You have to understand that Cardano has a lot of people in it, 4.3 million users, it looks like from the last count that we have. And many of those users are financial professionals from Wall Street. Some are from the hedge fund industry. Some of them have dealt and managed assets under management larger than the market cap of Cardano. So they're floating around, and they're in many of the different institutions, and some of them work for me, and some of them work for other people, and some are just free agents that enjoy being in the ecosystem. And we're always a phone call away to the GSRs and the Jane Streets and the Wave Financials and the Brevin Howardses of the world. And everything in Wall Street is transactional, meaning you state your goal and they figure it out. And it's just a negotiation on how much you're going to pay for it. Even Goldman Sachs has a price. And we are a sovereign entity. Cardano has a 1.7 billion ADA wealth fund. It's about $1.2 billion. That's nothing to laugh at. And we have to start treating ourselves that way. And we have to start acting in a considered and deliberate way and systematically solving problems. And so right now, one of the biggest problems before us is a lack of stablecoin liquidity in minting and a misaligned ratio of our TVL to our stablecoin compared to our neighbors like Solana and Ethereum. That's definitely a solvable problem with the Cardano Treasury and syndicating it with a lot of good yield products. Bitcoin DeFi will also massively solve this because many people will come and lend their Bitcoin to participate in yield products on Cardano. So that will result in the minting of assets, but you have to prime the pump. And I'd say there needs to be about $25 to $50 million of Bitcoin to get started to prime that pump. And so we could easily do that as an ecosystem, or other actors can. And so we've been discussing with a lot of large-scale Bitcoin holders about options there, especially if they can be paired with high-quality yield instruments. And these are discussions that are part of the overall Bitcoin DeFi agenda. It's the same with XRP entering our space. I'd love for Cardano Midnight to be the DeFi layer of the XRP ecosystem, so they can stay and continue to be XRP, but then they can get much better yields for their holders and for Ripple itself, the company that created XRP. So we're in a good position, and the ecosystem's strong. And we should never forget the principles we were founded on, which is move in a considered and deliberate way and be systematic about it. And just because people are talking about something, don't panic. It doesn't mean it's going to happen tomorrow. We were talking about the budget in November of last year, and it still has not been closed here in June. So everything is built for conversation, and everything is built for a systematic approach and for everybody to share their opinions. And some people are very knowledgeable, and other people, they just say stuff and they've never done it or tried it or been involved in it. And some people are kind of in the middle where they're quite good at one thing, but perhaps not so good at another thing, but we will get this done as an ecosystem, and we'll continue to improve and strengthen things. The budget process alone, there's going to be a large postmortem, and hopefully it results in changes to the Constitution, some improvement of the executive function of the government, including delegated authority, and also a mechanism upon which we can all agree to a universal set of KPIs and strategy for Cardano. And then the budget process will be immeasurably easier to conduct for 2026. But remember, we've strengthened our institutions through this entire process. We've written smart contracts throughout this entire process, and we've trained all the D-reps on things that work well and not so well. And I would argue that we need to enhance the voting systems as well. I think the time has come to have some form of anonymous ballot for certain voting rounds so that people, especially smaller people, can vote without fear of retaliation. I think the time has come for quadratic voting as well as preference orders, especially for large-scale budgets where you need to filter down a set of hundreds of things to dozens of things to things that head off against each other. And it's also clear that the community wants to have multiple administrators and multiple institutions, as evidenced by Amaro's approval, and varying degrees of quality of oversight. In some cases, there's proposals for people to be their own oversight, which is going to be unique and interesting. And we'll just move our way through it and have those discussions, and I think we'll get there. And a very healthy component of those discussions is the concept of a sovereign wealth fund. By the way, by having that, it also means that Cardano can start making blockchain-to-blockchain partnerships because we can take positions in other assets as well, and they could take positions in ADA as well. So effectively, these can form trade alliances between Cardano as a digital nation and other cryptocurrencies. So that's all I have to say about this. Food for thought for everybody, and I hope you guys all think about it for a bit. It's a thriving, healthy ecosystem. We got a lot of very cool and interesting things that have happened just in the last year, and we've seen a tremendous amount of growth in the ecosystem as a whole, all of cryptocurrencies, but in particular Cardano. The interest is way up. Search volume about Cardano on Google is way up. A lot of people interested in building projects. People are starting to get the dev model, and we're starting to systematically solve our problems, like the Cardano DeFi kernel concept, things like Bitcoin DeFi, things like the upcoming launch of Midnight. It's getting good, and Midgard is getting good, and Starstream is getting good, and there's a lot of great work on the client diversity side. So I'm very happy about how the ecosystem is shaping up. It's just a lot of rough edges. Some are legacy concerns that will eventually get resolved, and other ones are just we've never done these things before together as an ecosystem, and things that are easy or trivial for me, like I can just pick up a phone and talk to a Wall Street person. The community has to learn how to do that and build organs for that and the trust pairings and relationships for that. And we will do that. It'll get done, and it'll just take some time. But we're doing it all together, doing it out in the open, and no matter what comes our way, we're a very resilient ecosystem. So thank you all so much for listening, and I will see you guys soon. Cheers.